It's not very often we get the CEO of a major blockchain like Algorand here, but we have Staci Warden, and we cover so much. We cover and talk about all the unique features of Algorand, the use cases from payments in Afghanistan. We cover exactly what's happening in the US and how we have to navigate this regulatory system so we can build, expand, and innovate. We dabble in on stablecoins. We talk a lot about transactions per second and how important instant finality is for a blockchain like Algorand and for a lot of the real world asset tokenization that they are using within their applications. This is such a great episode with somebody that has a ton of traditional and a ton of Web3 experience. You will definitely love this episode. Reach out to me or Staci after the episode. Let us know how you like it. Talk soon. This is your host, Stephen Sargeant, Around the Coin podcast. We are lucky enough to sneak the CEO away from ETH Denver, stayed home, made sure she was available for this podcast, the CEO of Algorand, Staci Warden. Staci, tell us a little bit about yourself. We're going to go into your background a little. We're going to touch about what Algorand is all about and what you're working on and what you're excited about in the industry. But as we said before the pre-recording, it feels like there's not a day in crypto where it's the day in crypto. Everything's always happening so fast. Tell me a little bit about yourself, and then we'll jump into some questions.
All right. Well, I was the main keynote at ETH Denver, and I said, I can't do it. Vitalik wanted me to, give my views on Ethereum. I said, I can't do it. I've got to do Around the Coin podcast. I don't know how much you want to actually really know about me, but I started in TradFi famously. And from TradFi to crypto is kind of a one-way street. You get on it and you just never go back. Despite the potholes, despite the twists and turns, despite the on-ramps to off-ramps to nowhere, sometimes you just don't get back in your car and go the opposite direction.
I love it. I'm curious, what attracted you about TradFi? There's always interesting stories. Usually a lot of the bros I talk to, finance, Porsches, Lamborghinis. Other people are they're really, by the mathematics of it all. What kind of captured you about, hey, I want to get into this fast moving world of traditional finance?
I was always interested in international affairs and foreign countries. When I was in second grade, I did a triptych essay called Iran to Iran. So
first of all, that's a beautiful title, by the way. I don't think we can't let that go without saying that. That was good.
Thank you. It was 3-part art project, but I always wanted to travel, and I always cared about other countries, and I always cared about developing countries. And that got, as I got older, more and more interesting to me. And I worked for a professor at Harvard who is a kind of a famous macroeconomist. And so I started off as an economist, actually. And so I was an economist for the first, sort of decade of my professional career. I worked in the Treasury Department. I worked for the Center for the Harvard Institute for International Development, the Center for Global Development. But the more I worked on the macro and the trade, that you mentioned, the more I realized that stuff doesn't work if financial markets don't work. If the financial markets are gummed up, nothing else works. And I developed this simple theory of the case, which is that if households have a way to give their excess savings directly to the private sector, I believe in a private sector-led model of growth, not a government-led model of growth. And so if you can, in these developing countries, households put their money in the bank and the bank doesn't do anything with it. It buys government bonds and bankers go play golf at 3:00 in the afternoon. But if the private sector, through well-functioning capital markets, can invest their household savings in the private sector, well, then the private sector will grow. It will hire more people. Those people will have more savings, and those savings will be rechanneled back into the economic growth engine of the country. That's a little bit, I would call it my North Star of things. And Bitcoin for me was a way, when I first found out about it in 2013, I thought it was a really important part of that solution, especially in terms of FX flows. And I don't think I was quite right about that. I don't think Bitcoin's exactly fit for purpose in the way that I thought it would be, like the peer-to-peer electronic money transfer. I don't think that's the Bitcoin maxis out there. Don't get mad at me, but it has its purpose. Of course, I hold a bunch of Bitcoin myself, but I always thought that crypto could be this very direct way to help improve capital markets.
Do you think, looking back, I started around 2017, just before maybe 2016, when I really started going to the conferences, and a lot of the chatter back there was help bank the underbanked and unbanked. And you coming from this international lens, do you feel like we've done that? Because it feels like the amount of unbanked and underbanked hasn't changed much in the last 15 years that Bitcoin has been around and cryptocurrencies in general. And then do you think stable coins have kind of replaced your ideology around what you thought Bitcoin could do in regards to this peer-to-peer transfer?
Yeah, a little bit. I think you put your finger right on it. Stablecoins are going to be critical because you can't handle the volatility of cryptocurrencies often, right? For payments. So are, I think, the absolute bedrock primitive for our space. They have their own non-purist kinds of issues, right? So these are private sector companies that hold reserves, and you're not always 100% sure where those reserves are. In some cases, more than in other cases, and I would say all of them have gotten better over time. You'd absolutely need some tag back to the dollar. And I think it's interesting, actually, despite the best efforts of the Biden administration to kill this whole industry, stablecoins are 98% US dollar based. There's something about a U.S. ethos and the rule of law and the democracy that comes with this country and the size and the economic prosperity that makes U.S. dollar stablecoins really just a giant among the others. But I think there's a couple of other ways that, and we're not there yet, of course, as an industry, but there's, in addition to stablecoins, there's a couple of other reasons why crypto is quite good for financial inclusion. So I'll just give you one example. There's a company called HisabPay that is built on Algorand. They are doing basically all of the philanthropic and charitable payment flows into Afghanistan. When the Taliban took over, of course, the international community said, no money to the Taliban. And the Taliban came in and said, well, we're going to have the central bank. And so, if you want to help this country, it's going to come through us. So the regulators said to anybody that wanted to help, Save the Children, World Food Program, all of these guys, you need to be really, really audited because we need to make sure that the money you can send can go to like women and children, but they can't go to the Taliban. And HisabPay said, well, if we put it on a blockchain, well, then you can see and you can trace those flows.
Right.
So it just
and you can trace where it's being spent too, right?
Yeah, you can. Right.
What really people want to see is like, where's that money actually going to?
Exactly.
And what it's being spent on.
Right. And as you and I both know, that's very easy to do on a blockchain. And so that's a really good example of they have a digital Afghani. The money goes to SubPay's account at the central bank at a Afghani bank. The central bank can see that. When you on and off ramp, the central bank can see that. But all of those transfers that are digital, Afghani women that can't read or write can have a card. If you have a smartphone, you can do it on your smartphone or even a flip phone. They are making, I think over 100,000 electricity bills have been paid digitally this way. It gives dignity to these people that are receiving funds. It saves time, and women that can't travel very easily in that country, they also now can make payments digitally. The benefits of digital payments, right? But the idea that in a blockchain can bring those same convenience and dignity benefits to a country like Afghanistan is pretty incredible. They're now in Syria talking about how they might, do this in Syria too and help. So like just the ability to see what's going on element of a blockchain also helps with financial inclusion. So you've got stablecoins, you've got the ability to see what's going on. And just because I've been talking for a while, I'll give you just one more quick, this ability for programmable money, right? If you are not somebody that other people trust, the idea that you will only get paid when something happens and that contract can be enforced by code can help you get credit. So just one example could be, this is not somebody didn't build this on Algorand like HisabPay, but it's just like an archetypal example. If you have really bad credit, but you want to lease a car, and you can have a smart contract talking to an Internet of Things sensor on the car, you'll never get a car loan because nobody wants to hire a repo to go and get your car if you don't make a payment. But if you have this thing on your car, so the car won't start if you miss a payment. The car pings the blockchain every day. Are they current on their payment? Yep. Good. Car starts. The minute that's not true, the smart contract won't release, will not let the car turn on. And so ironically, you could get the ability to lease a car because the the lender knows that they can turn it off when
Right.
they want to, right? And they can make life very hard for you. Same
That's
thing
great
as
for
you
the
know that
private
there's
sector. I think
yeah,
those are also people. You'll probably also see the people that are like, "Hey, that's why we don't want governments to create their own stable coins and CBDCs as well,
right.
because just
Yes,
as
totally.
easily as
Right,
the
exactly. You
company
don't
can
want to
take off
go
the car, we saw. I'm in Canada, so we have the best use case for I think this example that you're stating right now. And I would love to know, like, Iran in grade two is like kind of like, I don't even know when I was in grade two if I even heard of Iran. I guess depending on where you are in the world, but you've done business in over 50 countries. You probably traveled all around the world. What are some of the innovations you see? You just gave a really great example of what's being built on Algorand. What are some of the innovations you're seeing from a digital asset lens in some of your travels, or even just the most unique use cases like Afghan women being able to use their phone to receive and send payments? Is there anything else that you've seen internationally?
well, I think the most important thing that I have seen, it's not particularly crypto, but it is really the most important thing that I've seen in the, decades that I've been doing it is the move from goods-based aid to cash assistance. This was really, really hard to get done back in the day. Everybody thought, oh, there's a starving, people are starving in, say, Ethiopia, right? What we should do is we should fly tons and tons of grain to Ethiopia. Now, you may have to do that in the first week while people really, really are on the ground. But the more you do that, the more you ruin the agricultural economy of Ethiopia, say, right? Because you're flooding the local farmers and you're making it so that they can't make a difference. So they can't make a living. But so if you can get money somehow to them and cash to people so that people with cash can be like, okay, where can I buy some grain? And then a farmer's like, oh, I have some grain I can sell you. It's kind of a bit more standard now, but it was so hard to get done back in the day. And then, of course, you can see where I'm going to go with this. If that cash can be digital, if that cash can have all these other properties, if people can have wallets and you can get financial inclusion associated with the idea of being able to make payments, with the idea of having a bank account. So
Right.
the first thing was this move from goods to cash, then from cash to digital, then this idea that you don't actually need to have a bank account in a bank. I mean, there are some countries where you can't get a bank account unless you get a letter of reference from somebody else with a bank account, right? Like it's completely preposterous. But if you can have a wallet and you can receive money into that wallet and make payments out of that wallet without having to have a bank account, you have to be KYC'd. I mean, some villages are, a day's walk to the nearest bank branch, right? People like, and this is not crypto, but like M-Pesa in Kenya, absolutely transformative for that country, right? M-Pesa is too siloed. The transaction costs are too high.
Right.
It's the same, in the background, same banking rails. So like crypto's even one better. Hisab Pay is better than that, right? So that's the kind of stuff I get very excited
I
about.
love
as
it.
you can
And,
see.
I think people are saying like, oh, those are kind of like far off examples or those on the fly, to first world countries. But we had friends that got into crypto from the UK because they wanted to rent an apartment in Canada. But in order to get the bank account in Canada, they had to have, as you say, not even a letter of reference or somebody else. They have to have an address. But in order to rent an apartment, they needed money. So they were caught in this like circle of, no way to get the things that they needed. And they just used crypto rails in order to facilitate the transfer of funds. So
Yeah.
these are use cases. Even for me, I know when when you guys have the $1 billion lotteries in the US, I'm always like telling my friend, like, yeah, put a $20 in there for me. But there's not an easy way for me to send somebody from Canada to the US or an inexpensive way. And I think
Right.
that's what people don't realize and why crypto is so important.
I
I
mean,
want to get in.
you can send a movie from Nigeria to Malaysia in a
Right.
minute over WhatsApp. A movie, but you can't send $10 from Nigeria to Malaysia without traveling through the correspondent banking system, three
Yeah.
banks on the way to the Fed, clearing at the Fed, then three banks back on the way to Malaysia. It's ridiculous. 10 days later, and somebody's taken, 4% or maybe 7% off the top, and then it got there, or maybe it didn't get there. Like, it's
I was gonna say
crazy.
that. That's why I was gonna go. Like, yeah, if it gets there, how it
If it
gets
gets
there.
there,
If you don't have to call the bank and explain why that
right,
funds were sent. I've
right.
once had the wire transfer nightmare. I think
It's just incredible. But you can send an algo in, a second, right?
I love that. Let's talk about Algorand because I think it's one of the brands and one of the blockchains that people know about. But it's like if I said someone, what does Algorand do? What makes them, a competitive advantage over the other? I don't think they'd be able to easily answer it. So it's a
Well,
great
you
job.
tell
You've
me
done
who
a
those
great
people
job
are. You
of
tell me who those
branding.
people are.
You've done a great job branding Algorand. But I would love to like take us under the hood. What is Algorand and what does it mean to you? Like, what attracted you to Algorand versus maybe another organization or a similar company?
Right. Well, if there's anybody out there who's not heard of us, then I want you to give me their phone number so I can scold them, because that's ridiculous. They've been living under a rock as far as I'm concerned. I was headhunted to be on the board of the Algorand Foundation initially. And if you are going to be on the board, you are lending your reputation and your Rolodex to that organization. And your guidance, of course. But really, when you want a board member, you're buying their credibility, right? And so I did a fair amount of due diligence on Algorand. You can be assured before I took the board position. I liked everything about it. I loved the origin story. I loved the founder. I loved the technology. And I won't say that I understood it nearly as well as I understand it now, but as I've spent more and more time with this technology, with this ecosystem, with these builders, with the team, it just gets better and better, right? And we are making it better and better. So that's how I was in crypto for other reasons. I was actually headhunted to be without. That's how I found out about it.
That's awesome. Yeah. What is Algorand's main thing? Like every blockchain, whether layer 1, layer 2, really stands for one feature that they're like, hey, we're going to go all in on this. Maybe 70% is maybe similar to other projects or protocols, but we're going all in on this one feature or this one ethos. What do you feel that ethos is for Algorand?
Stephen, it's instant finality. If there is nothing else that your listeners understand about Algorand, it is the fact that transactions are instantly final. When a transaction is made in a block, there's no soft fork. There's no period of time, like with other blockchains that, is 6 blocks famously on Bitcoin. I don't know what is 12 minutes, something like that on Ethereum. You're just not sure, right? Like whether your transaction is going to make it into the block with the most work associated to it, the branch with the most work associated with it in the Bitcoin example, or not, right? And then they kind of fall off into the ether if they're not picked, and they get picked up again later, right? Okay, that's fine. But with Algorand, you never are in that situation. And it's not, 10 minutes later. It's not 2 minutes later. It's not 1 second later. It's not 10 milliseconds later. It's instantly final, instantly. So you will never, in a stablecoin, have 2 versions of with the technology coming, I would be very nervous to have a stablecoin, frankly, on another chain where it can get picked off in 2 versions of the world, even if that version of the world just acts for a millisecond. So there's other great things about us, but where we are unique is that the consensus mechanism of Algorand, brilliantly devised by our founder, Silvio Micali, does not allow for that kind of soft fork kind of competition of blocks.
No orphan blocks. No
orphan blocks. None of that. None of that. Look, we have, of course, we're green. We have 10,000 TPS. We have, sub-penny transaction fees. There's lots of, we've not been down for a second since we went live. Like there's lots of great things about our tech, but you kind of set me up for that, because that is like our thing.
I was just like laughing in my head, like shots fired, Solana. No,
well, you know what I feel like sometimes is it's like shots fired at God, which is not a good thing to do ever. So I don't want to tempt the fates by saying that we've never been down for a second, but yeah, it's true. We've never been down for a second.
With this instant finality, with I think you said 10,000 transactions per second. Yeah. What are the use cases? And are transactions per second still I remember that was like the main feature for a lot of the protocols that we saw. It seems now as we're adopting a lot of the traditional financial products that this, transactions per second should be extremely important, because we're competing with or collaborating with the Visas and MasterCards of the world. What are your thoughts about the main use cases where the finality and the transactions per second are vital to run some of the applications that are working with Algorand?
Right. So, I think finance is, of course, the short answer, right? Like, supply chain, tokenization or RWA tokenization, they can tolerate a little bit less than that. But for anything with finance, if you talk to a big, trading firm and you want to talk to them about their back office operations, we have a couple of these conversations going right now. They're like, well, we have to, reconcile 500 gazillion trades between 3 minutes before the closing bell and the closing bell. Like, how many can you do? Right? Like, this becomes a very critical, and you better not go down during those 3 minutes either. And when's the last time you went down, by the way? These things when there's lots of money on the line, these conversations get very serious very quickly. But I will also say that, kind of tying back to our first developing country or financial inclusion conversations, so Visa does 7,000 transactions per second, but Visa can handle 50,000 transactions per second if it needs to. Not every
Right.
minute of every day, but it can spike that high. And if you have aspirations to do micro payments, very small payments that can create economic activity where economic activity does not exist right now. So a couple of sub pennies to a web page, or to have Wi-Fi for a minute, or like this kind of like very, very small things, then you're going to need a blockchain that can do like 100,000 transactions per second, right? Now, our tech guys say, well, Staci, Foundation, show us the TPS and we'll build it for you. Like, we could do it, but we're not going to do it right now when you're not showing us anything close to 10,000 transactions per second on a consistent basis. So we think we can get there. But you made this point before. It's a little bit of a chicken and egg. You have to show the use case before you can get the tech guys interested in building it for you.
Interesting.
But we have tested, and we have on-chain. We can demonstrate on-chain over 10,000 transactions per second now, for sure.
And I think, people don't understand downtime until they see it in real life. Like, I think it was like CrowdStrike, the planes went down, the POS systems went down, and
Right.
billions of dollars were lost within a matter of hours. But now think of, all the financial traction that you're talking about. 3 minutes could have cost the same exact value that those hours costed. So, and these companies are run those margins, those transaction fees is what they live and die by. But I also see that you have a whole ecosystem, like any good blockchain. You have NFT platforms, lending platforms, pay platforms. What are some of the gems? What are the companies other than Hassan Pay that you like to bring up in conversations when you're maybe trying to woo a new developing class to build on Algorand?
Now, you get me in trouble when you ask me questions like that, because, everybody,
Who are your favorites?
yeah, they're not my favorites. They're not my favorites. Everybody, guys, everybody's my favorite. You're all my favorites. But there are, of course, some very big protocols, big companies building on Algorand. And so our biggest lender is a DeFi protocol more broadly, is called Folks Finance. And the CEO of Folks Finance is a very smart, very entrepreneurial, and very strategically wise human being. He came out of an accelerator that we ran in Europe, and he has built like this company. He never complains about anything. He just keeps his head down. He builds, we have an investment in his company, but he doesn't come cap in hand all the time. Like and he's just really like, that guy is not going to fail. You know what I mean? He's just not going to fail. We have a bunch of sort of other DeFi protocols. Tiny Man, it's a trading platform, decentralized trading platform. A bunch more in this category, of course, CompX. But we have also a number of different tokenization platforms. Archex does tokenization. They are an asset tokenization platform that is regulated by the Financial Conduct Authority in the UK. They spent a number of years making sure they were fully regulated. We have a programmable digital euro, not a stablecoin, but a programmable digital euro built by a company called Quantos, also regulated. Of course, you're not going to have a programmable digital euro that's not regulated, but they are regulated by the Dutch central bank. Very, very hard as well, regulatory environment to get approved in. And so we're very excited about them. Prop tech, a company called Lofty AI. And what they do is they allow you to tokenize shares and rental property income. Property income is a very good source of income. Very rich people, accredited investors, they all have rental income. But what they do is they buy apartment buildings. And, if you can't buy an apartment building, you can't have this source of stable income. But in Web3, of course, with Lofty, you can buy for as little as $50 just a share of a rental property, and get a share of the income that comes from that rental property. And they're set up, each one of those properties, the investors are set up as DAOs, and they actually manage that property. They look at, if you go to Lofty AI's website, you can see they are, they give you information about the tax history and the rental history. And, they all got together once and fired a property management company. They all got together once and gave, I think a woman, she had some medical issues. They gave her a couple of months, break on her rent to like help her get back on her feet. Like, it's very, very, one that I like to talk about is a company, because I like companies that are building markets that don't currently exist. I always think this is the most interesting thing. And of course, real world asset tokenization is exactly that. It's bringing liquidity to markets. But another company, an Argentinian company called TravelX, created a secondary market in airline ticket sales. So instead of having to give your ticket back to the airline, paying a penalty, you have to go in the same place within 1 year, same route, all that nonsense. They started with an Argentinian airline called Flybondi. You can go to the Flybondi website. You will not see Algorand. You will not see Travelex. You'll just see a bunch of people putting up their airline tickets for sale. And, you can, if you're a frequent flyer, you can give your lounge pass with your ticket if you want, for example, or, some other perks that you might have. You can transfer those with your NFT. So there's lots of other examples, of course, but those are some of the big ones.
Talk to me. You've been in TradFi for so long. You're obviously a staple in the Web3 industry. We've seen the Bybit hack, obviously the FTX collapse. What are your TradFi friends, saying about you and Web3? Do they understand this just comes with the territory when you have an emerging asset class? Or are they looking at you like, oh, aren't you tired of this? Here's Bybit again. Of course they lost $1.5 billion. I'd love to know from you, because I feel like you are at, you're rubbing elbows with the tops of both those industries, both in the trad and DeFi. What are some of the conversations you're having? And maybe what are some of the DeFi people saying about the conversations that you're trying to have with the TradFi when you're trying to get real world asset tokenization marketplaces to expand?
There's a little of both, I would say. I mean, for me, the funniest thing is more that, if I go away for the weekend with a bunch of friends, it is inevitable that they're going to say to me, I don't understand crypto. Will you explain crypto? I say, you don't want a dinner lecture, surely, on crypto. Yeah, but I don't understand. And, you can have the same conversation kind of with somebody for 5 times, and they'll be like, people, they have this mental idea that they're not going to understand it. It's comes from Mars or something like that. And I'm like, it's not that complicated. There's 2 really fundamental things you need to know. And I launch into my blockchain 101. What are the core things, which I'm happy to elaborate on, but I don't think you need. And the second thing I'd like to remind them is, there's a lot of nonsense in crypto. I'm not going to pretend that there's not. And so when they say things like this, and of course everybody knows who Sam Bankman-Fried is, right?
Right.
And I remind them that fraud is fraud, right? And with this recent Bybit, I like to remind them that Citibank, was meant to send $1 million interest payment to Revlon creditors, and instead sent them the whole $900 million debt that they held. They repaid the debt of $900 million, and they're just trying to make a $78 million interest payment. And there's a lot of checks at Citibank. There's a lot of people checking those things. And so if it can happen there for $900 million, it can happen at Bybit. I'm sorry. The thing, though, that makes Citibank different than Bybit is that crypto is not forgiving. When you make a mistake banking, or you make a purchase that you didn't want to make, there's somebody to call. You can be like, look, I didn't mean to, My closest friend somebody scammed her on, Venmo. So she sent somebody on Venmo $600 because he scammed her. And she's like, I'm never using Venmo again. I'm like, it's not Venmo's fault. The reason that payments go on Venmo is because you can't get it back. You have to be careful. It's a trade-off. It's not Venmo's problem that you did this. But in TradFi, you can get it back. And in crypto, you can't. There's lots of good, sleuths out there to help you, but just the stakes are higher. It's better, but the stakes are higher,
I love that. And we have to remember, the Lazarus group is involved in the Bybit hack. So it's not a bunch of amateurs that got a hold. These are the people that pretty much shut down Sony Productions so badly that they had to use a fax machine to communicate with the coffee shop down the road. These are professionals at their core. And this is all they do is plan these attacks.
And I don't like to do this, but I will, since you set me up, I will make the point, though, that complexity risk. It's just a law of nature that the more complicated things are, the riskier they are. And on Ethereum, everything is smart contract based. So you're always calling contracts to do things. Right. But on Algorand, things like rekeying, things like multisig, things like asset generation, token generation, those are all at the layer 1. You don't call a smart contract to do that. It's built into the protocol on Algorand. And so you, as a multi-signer, you should always check the hash, right? If they had checked the hash against the hash, they would have known. But it's a very unfun UI, right? It's not clear a lot of times on your ledger device, what you're doing. It's not a good in crypto, we don't have a good user experience anyway, but you would have been able to, I think, see that something weird was going on because it's not like a contractor calling. You would be able to tell more easily.
Very
I believe.
interesting. I want to talk like now that we're on the subjects of hacks, exploits, attacks, and vulnerabilities. On the website, I just read that, you promote the fact that you're post-quantum computing. So basically, we've heard a lot of chatter, especially with AI over the last year, that quantum computing is going to come and break the Bitcoin blockchain and all the other blockchains. I've seen very few blockchains respond to this, actually. People are just saying, oh, it'll never happen. But it seems that you're very, strategically showing like this is why this doesn't impact Algorand. Can you kind of walk us through this, and how early did you have to start thinking about this to protect your organization, the foundation, and the blockchain from something that probably wasn't that far along when the initial thought had to go into it? I'm assuming.
Right. So where to start? The most important thing is not to overstate our quantum security. That's the most important thing. So the real problem with quantum coming to cryptography in general is that the curves that the cryptography that is based on elliptic curves, which are on a kind of a two-dimensional Cartesian plane, if you have a signature based on that, a signature scheme based on that, quantum computers can blow that to pieces. So you are really not, those signatures are not going to be safe. You use signatures for, of course, signing various different things and moving your money around. And if quantum computing can break that cryptography, then they can take your money. They can take your coins, right? So this is a very important threat. What we used is something called, based on a Falcon key signature, a signature scheme. And Falcon means, and and before I explain what that is, based on the signature scheme, these Falcon signatures, we have signed on the blockchain that all of the history of transactions up until that point, and it happens every like 12 minutes, all of those, the record of the ledger is quantum secure for the history. So if the blockchain was attacked in a quantum way, it would be fine. The history of the chain would not be compromised. Now, where we are not quantum secure is in the consensus mechanism for the accounts, for the history, the things that are going on right now. And you can be very sure that this is front and center in our roadmap, but the history of the chain is secure. And we can say that, and other chains can't say that. So that is very important. It's a very important first step.
Right.
The fact that we're doing this, though, is basically because we are founded and we have had on our team some of the most famous and important cryptographers in the world. Our founder is a Turing Award-winning professor of cryptographer from MIT named Silvio Macaulay. Like, he's one of the most important cryptographers living today. Is a part of Falcon, which is based on something called the GPV framework. The GPV framework is created by these guys whose last names are Gentry, Picard, and Vaikuntanathan, I think. Vaikuntanathan. Both Gentry and Picard are cryptographers associated with Algorand. So it's like we have some very deep brains working on this. And shall I keep going about Falcon, or is that kind of enough?
I would love to know, like, why are you so first of all, should other blockchains be as concerned? Like, should they be focusing a lot of their attention? Because I don't hear, you were the first website that I've, perused from when it comes to blockchains and protocols that really address this, quantum security issue or, risk. Do you think other blockchains should be paying more attention to this?
Yeah, we're very concerned about this. I mean, we don't want people building on the Algorand blockchain or holding their money and their algos to have it taken away from them with quantum by quantum computers. Now, I'm going to say a few more things about this, and then if you ask me a follow-up question, I'm really not going to be able to, answer it. So I don't want to do two things. I don't want to pretend that we are more quantum secure than we are, and I don't want to pretend that I know more about this than I do. I will say that the Falcon signature scheme, which is what we base this historical quantum security on, is an acronym for Fast Fourier Lattice-Based Compact Signatures of N-True. And it's the lattice-based part which is the most important. And so these elliptic curves, which are on a two-dimensional Cartesian plane, are replaced with an n-dimensional lattice. And you don't have to know very much math or very much cryptography to just kind of intuit that an algorithm that is based on, X and Y axis is going to be a lot easier to break apart than an algorithm that is based on like an n-dimensional lattice of all these different dimensions that you can't even imagine, right? Like that's going to be harder to break. And so the quantum secure cryptography is based on this very elaborate kind of n-dimensional lattice framework. The fast Fourier is because it's based on fast Fourier sampling, and that makes it very efficient. And the signatures, and N2 is the kind of lattice. The signatures are compact, and having signatures that are compact are very important for the usability of it, right? And so the National Institute of Standards and Technology, NIST, sent out a global call to see what kind of quantum secure cryptography they could, that the world could find. They ran this contest for 5 years, and the Falcon signature scheme is what won. Now, so if you ask me why I believe it, I mostly believe it because the National Institute of Standards and Technology ran a global, contest, and this won, and it hasn't been broken, since. So I think we're looking very good so far, and we just have to now apply this to the other elements of the blockchain, and we are very focused on doing this in 2025. That's a very important part of our overall roadmap.
I love that. Talk to me about, like, obviously having that security is peace of mind for a lot of the developers and, protocols building on Algorand. How difficult is it to attract and keep protocols, developers building on your blockchain? One, because it seems like a lot of people are offering tokens and, grants, and it feels like people just jump from one blockchain to another, then another one has money that they're giving away. How do you, obtain and maintain a healthy ecosystem of builders?
Yeah. When I came, we gave a lot of silly money. I mean, it was absolutely ridiculous how much money we gave. And that's not sustainable, right? And so we don't do that anymore. The community does have a grant program that it runs that we handed, and part of our decentralization, we handed over a grant program to the community. We were in beta for a while, and we're going to roll it out fully this year, but you just have to have self-discipline around that, right? And if you have self-discipline around that, you're not going to get the grantpreneurs. You're going to get the real builders, the builders that are on Algorand. When I got here, and we have many builders that are still here from when I got here. And when I got here, I went on a listening tour. What are the issues? And every single person, I thought there would be a range of issues, but really at the top of everybody's mind was, this is great tech, but it's impossible to build on. It is not fun. The developer experience is not fun. And it is, terrible for all kinds of different reasons. So because we have the best tech in crypto, I said, to the team, my CTO and I said, okay, we are in the excuse elimination game. This is what I'm always saying internally. We're in the excuse elimination game. We have the best tech, so we have to remove all the frictions to using it. So the most important thing to do, and this cost, $1 million to do this, was to have a coding environment that made sense. So now we have something called AlgoKit, which is a very nice coding environment. And we introduced Python, not like a cousin of Python, not a special instance of Python, like absolute Python developer environment. So you have a good developer environment. We have a good language. We're introducing TypeScript now. All of that stuff makes it very easy now to develop on Algorand. So we sort of thought, like, the hard part has been done for us, because the brainiacs in Boston that built the underlying protocol, they built the best protocol. And so it is our job to make that protocol easy to use and easy to build on. And so we've been very focused on that. But I bring this up not so much to props to my CTO for driving this forward, but to give props to the developers that have been around for so long, because they recognized the quality of the tech when it was not fun to build on. And I really think that's a tribute both to the underlying technology and to them. And one builder said to me on another chain, big smart contract based OG chain, they said, your success is your demise on that chain, because it can't scale with you. So we know, and we're going to complain to you every time we talk to you. And this is terrible for us to go through right now, but we know once we get up the learning curve that this chain will be able to be with us on our quest of, total world domination, and whatever we can do, the chain can handle. And so that was the trade-off they made. But my job, our job at the foundation, is to make that trade-off go away, right?
And I think that's important because, talking to a lot of founders that have layer twos or, specific protocols, that was their concern with a lot of the bigger OG chains is that, A, it wasn't specific. It did everything, which meant it didn't really do anything that they needed, right? You
Yeah.
want to run, gaming or gambling, like it wasn't great for that. It was great for just general use cases. And
Right.
that was the trouble. But because it did everything, it made doing specific things really, really hard. And then to scale those specific things, to your point, even harder. I would
Yeah.
love to know, it's funny that you say like, we built the best tech, but nobody wanted to use it, or it was like really difficult to use it,
Right.
which to your point is a great problem to have. You just have to clean up for the most part the UI and add in the features that make things easier to use. How much are you leveraging AI? We're seeing so much use of AI in blockchain, and hey, this AI can help you write a whole smart contract code and execute it and run it through a test environment and do a self-audit. Like we're hearing AI do so many things. You're with the most technical people. Are you using AI? And maybe what are some of the limitations that people aren't talking about for some of these blockchains that are heavily using AI?
Can I just say, just so I don't get crucified by our engineering department when I get off this podcast, that I don't think I think they would be mad at me if they were to think that I described all of the work that they did as cleaning up the UI. I mean, there was
we have made a lot of friends, Staci. We probably pissed off a lot of community. Bitcoin Maxi. I think we took some shots at Solana, Tether, Ethereum.
Yeah.
We're digging our own grave here. We might not be allowed to eat them for next year.
Right. It was a lot more involved than that. But yes. So of course we try to be, and we're not the richest chain, right? So we are always looking for efficiency wherever we are. So our new head of DevRel, actually it's not so new anymore, but he came in and he's like, our DevRel team needs to be able to scale. DevRel, this was in August. He said, DevRel is grounded for the rest of the year. Nobody in DevRel is going to any conferences. They're not doing anything. We need to update these developer docs. These developer docs are not in good shape. There's no zero to hero. They are not well organized. And they are not, the examples are not identified properly. The versioning is not identified properly. There's old stuff out there for like previous things. Like this is not acceptable. And that might be a very important thing to have in a pre-AI world, but in an AI world, it's critical because he needs to train those agents on the developer docs. And he cannot have developer documentation that is out of date in any way, or examples that don't pertain anymore out there for it to be trained on. So it's very much a matter of measuring twice and cutting once, like making sure you have the groundwork proper for the AI to help in the Discord channels to have a much more AI driven. If you get the same question asked a million times and the AI can answer the question, then our very smart DevRel guys can do more and more, harder to do. So that's an important way that we are, of course, using AI internally. I don't think that's exactly what your question is, though.
That was the exact question, is how are you? That's actually a really great use case. And
Yeah.
I'm very scenario based. I love this, like, hey, we use it for this and that, but then that's exactly what I was trying to ask is like, what are you actually using it for?
Right.
Versus a lot of people that say they're using it in general circumstances.
Right.
But it's like, okay, they used AI to like clean up maybe their dev docs with
Right.
ChatGPT with the wording, right? But it's not like really to the core of their business.
Right. And I can be a bit, annoying about this. They come to me for a Grammarly subscription. I'm like, everybody should know grammar. This is ridiculous. Like, I don't want to pay for a Grammarly subscription. Everybody should know grammar. I mean, I did lose that fight actually, but I was talking to the head of HR and we were trying to phrase this question for the annual reviews. It was basically, what did you do that what did you try to do that you failed to do? And I was like, that's not exactly right, because what if they tried to do something and they succeeded, but it was the wrong thing to do? Like it has to capture both of these scenarios. And so we were talking about this, how to phrase this question, blah, blah. And she goes, well, let's just ask, ChatGPT how they would phrase it. I'm like, we're not doing that. That's ridiculous. She's like, let me just. And so she's talking to me, but she's putting it on the side. She's putting it in. And it did come up with a very nice way to phrase it. It was kind of okay. And then she wrote back, could you say the same thing a little bit a little nicer, maybe a little, and it came back again. I was like, okay, fine. I raised the white flag. It did a very nice job, coming up with this question.
It's useful. It's useful as a thinking partner. Before we, end the conversation, it's been a great technical conversation. Talk to me about what keeps you up at night as a CEO of a blockchain. I know there's obviously financial crime risk, exploit risk, DPRK risk. But what are some of the things, when you have, a large team, 80 people, 100 people, I'm assuming people is very important. It sounds like a lot of the conversations you've had today is how important and how technical the people that have been really driving not just your team, but the builders on the blockchain. So tell me about like what's your concerns as you go through a day to day or start a new year.
Yeah, thanks. Well, just on the AI, just two quick things. Like we are very interested in the area of AI too. Agentic payments is one idea. Another idea that we're thinking very hard about is, of course, the validity of information, and so how to make sure that you understand what's valid and what's not, and so a blockchain can enable good AI. So it's not just about our back office, is my point. But I feel a certain responsibility to this ecosystem, right? I don't like it when we are, we were in the, we were not in the top 50 for a while. And this drives me absolutely crazy. And I feel very like kind of personally responsible for it. Like, I just absolutely hate it. Like, we should not be in the top 50. I mean, we should not be out of the top 50. We need to be in the top 25. We need to be in the top 5. And I said, famously, we need to be in the top 5 by 25. And, thankfully for me, we moved up a bunch of spaces. But our strategic plan this year is top 25 by the end of 25. And we looked very carefully at, if we were going to do that, what did we need to do? We have some very ambitious goals this year to very well researched to look at the top 25 chains. What do they do? Like, how many developers do they have? How many applications do they have building on there? What is the, their user growth, blah, blah, blah. What is the delta between where we are and what they need to get, where we need to be in order to have those same metrics? This is the kind of thing I'm like super focused on. And I'm not focused on chasing this or doing that. And, people can build whatever they want on Algorand. This is like, let 1,000 flowers bloom. But I am very relentlessly focused on, and so is the executive team, very relentlessly focused on what metrics do we need to move to make sure that we look like, and we compare ourselves very well in some things against those chains, but like across the board, we need to have the same, transaction volume. We need to have the same active users. We need to have the same user growth. We need to have the same developer onboarding. We need to have share of voice, right? Solana, for all of its technical flaws, the share of voice is incredible on that chain. In fact, when we're comparing ourselves to chain, we take Solana out and see how we do against everybody else except for Solana, because they're just so, how is it that we get there? And how is it that we spend money properly and smartly? And you have to say no a lot. You have to get people are pissed off at you, but you have to, and we don't have the luxury of keeping things on life support aren't going to make it on their own. We need to support winners. We need to help companies that have product market fit and that can make it on their own, and we're there to help them. That's what I spend a lot of sleepless nights worrying about.
I love how transparent, like completely transparent you are. I think a lot of CEOs would have a tough time saying like, hey, we're comparing ourselves here, we're measuring ourselves. But I'd love to know, like, a lot of the traffic right now is being driven by this like token creation, meme coin, speculation culture, which might skew some of those transaction volumes, might skew some of the things that are in your metrics. How do you be like, yes, we want to get a certain metric, but we also don't maybe want to do exactly what that chain is focusing on to get there? Is it a chicken and the egg? And then it's like, well, hey, if this is what customers want, why aren't we doing it? That's why I think I have a tough time. We always see when a new blockchain or a new crypto exchange launches like a very speculative meme coin, we're like, they're not really the judge and jury, but are they doing the best due diligence for their customers? Right. Not really a question, just kind of maybe your thought process of how do you balance like, hey, we want to be leading the board in some places, but we might not want to do exactly what it takes to lead that specific category.
Right. But layer ones don't really launch meme coins, right? So if you want a meme coin culture, we have I think a pretty good meme coin. I mean, some of them drive me crazy. They at me all the time on Twitter. Every meme coin ats me all the time. But they are very entrepreneurial and fun and younger than I am, frankly, group, right? So we have a good meme coin culture, but that has nothing really to do with the foundation. This blockchain has to deliver them the tech so that they can launch things very easily and quickly. And without paying a lot of transaction fees. And then, this blockchain can be really whatever it wants to be.
I love it. Looking forward to 2025. You talked a little bit about your focus on quantum security. Is there anything else on the roadmap that you're excited about launching, or just anything in the ecosystem that has you like, oh, this is very interesting. We haven't talked about this at the conference yet, and that's coming up a lot more from what you can see already in 2025.
I think one thing I do want to say, because I just had a demo of this last week. They gave me a demo of it. It's just so cool. So we have ex-governors. So if you are, and we just launched staking rewards. So this was a really big deal for us. And so now you will, if you are participating in the security of the network, you will be rewarded for doing that. This was a long project, multi-year project, went live without a hitch. We have removed a couple of $100 million of algos that the foundation had securing the network, because the community has stepped up, and you should run a node yourself. It's very easy, Stephen, to do this. I tell you, it's 30,000 algo minimum balance. But if you don't want to commit that much, you can join a ready pool and just commit as much as you want. You'll be part of this pool, and you will earn algos for doing so. It's very, very easy to do. So that was a big deliverable this year, very big deliverable. But if you do propose transactions to the network, you are then you become an ex-gov. And we had different qualifications for it in the past. But right now, if you are participating in the security of the network, you're an ex-gov. And as an ex-gov, you are going to be increasingly responsible for things on planet Algorand. One of the big ones is that the entire grant program will rest with you. So you're going to have to turn yourselves into little VCs and approve things and money to give to projects. And we rolled out a pilot to do that last year. The tooling around it was terrible, both to propose something if you wanted money for what you were building, and also to vote and to understand and da. And so we have a couple of guys building this thing for the last 6-7 months, and it's not even going to be live until Q2. A tool where this voting will be on chain, completely on chain. Everything about, because a lot of blockchains have this, but it's not on chain. Right. So everything will be on chain, and this thing is gorgeous, and I cannot wait for it to launch in Q2. So that's something that I'm pretty excited about. I'd mentioned the quantum security. We are also going to really start doubling down on privacy, come up with some good privacy offerings. We'll never be Monero, but we want to make sure.
That's probably a good thing.
Yeah. Yeah. And hopefully, in the new environment in the United States, we'll be able to, offer the same things that we offer to the rest of the world to American citizens, right? I mean, it's a shame that American citizens can't participate in some of the things that folks can in the rest of the world. So yeah, we have a lot.
And when you say that, are you focused, like, when you say that statement, is it more on like the private investment side? Like, hey, a regular American can't invest in these, private, industries.
They can't even use some of the things that are built on Algorand. You can't use if you're a U.S. citizen, right? Some of the things on other chains too. I can't try, making a payment on Telegram, for example, right? Because like I can't do that as a U.S. citizen, right? So we just need a level global playing field for crypto. And President Trump has said that he wants, the US to be a leader. But I think most people in crypto are like, great if we're a leader, but please, can we just like compete on a level playing field? Because we've been competing with a chain tied to our ankle for years now, right? So we don't need handouts so much. And I will give this administration some credit as well for moving very quickly on getting rid of some of the nonsense, and the SEC. I credit them, because it's not always that easy to say, yeah, we were wrong and we're shifting course, and they've been dropping some of these more onerous litigation. So I'm quite hopeful, actually, but busy. I mean, we're so busy.
The SEC is in a tough situation, right? Everyone loses money in the industry. They're like, where was the SEC to protect us? SEC goes after what they think, or maybe a little bit, overreaching. And then everyone's like, hey, back off a little. Give us a chance to be innovative. And it's like, they're really in a tough bind. As soon as somebody launches a meme coin that rug pulls, like, everyone's calling on the SEC to get involved. But, they can't just be getting involved like that and not, go after some of the things that, people have used and and rely on, which is a tough position to be in. But yeah, I think you're right that, not that you said this, but I think clarity is what, most people are asking for. We don't need to be the leader. Just give us some clarity so that we
Right.
can do something and not feel like, oh, someone's going to come after me with a lawsuit in the next 3
Right.
years.
Right. Exactly. Yeah.
I love
Exactly.
this. Staci, where can people find you? You're probably at every conference and every board meeting, but where do you like to interact with the general pop?
Mostly you can find me on Twitter, on X. We are also, Blue Sky is very Web3 native. And so
Mm.
we are amping up our presence on Blue Sky as well. And I get yelled at by my marketing team all the time because we're really expanding into Instagram and TikTok and all of these things. And they would like to see me a little bit more out there, but my home is on X, I guess. Yeah, that's where you can find me. And X and Blue Sky, I think, will be my
I
main
love
ones.
that. I love that. Staci, thank you for spending so much time and giving us like demystifying some of these complex things that Algorand is working on. And it does sound a lot more simplified than maybe a lot of other blockchains. And it's exciting to see you grow and scale to the top.
Thanks, Stephen. I appreciate this so much. And not just, about Algorand, but just like what you do for the industry. And you're a sane voice and you're calm and you're not like a hypester, but you're smart and you've got a following and a great niche you have for yourself. And I'm honored to be on your podcast.
I appreciate it. I don't think anyone would say I'm not a hype up. I'm hype, but I'm not like hyping up maybe some of the things that people would expect me to hype up when
Right.
I'm this loud and yelling.
Right.
I love talking to such fun people that have seen both sides of the industry. I feel like you come with so much perspective, and especially, times that by the international exposure you've had. This has been a really interesting conversation. I really
Thank you so
appreciate
much.
it.
I appreciate you saying that.
Thank you.